Good morning, traders. It is Monday, August 26th. Taking a look at the charts, we got the SP500 on the left-hand side. Here's our 30-minute chart, regular trading hours only. Blue line is our cycle analysis. Pink line here is our forward-looking cycle market bias. And as you can see, the market's been, we've gone from green bars over to orange, which is a sell signal, and more or less we've got a short signal. We get into these overbought, oversold market conditions. And more or less, the sell-off we saw on Friday was very similar to this type of sell-off over here, where the market's trying to grind out a bottom. Things are going to get really volatile. They're oversold. Price got all the way down to support, and we're seeing an oversold bounce happening today. Now, we had big panic selling in the market. Our green indicator up here, whenever we get one of these big spikes up into this 8 or 9 area, we get to these big significant cycle lows. When they come together, we usually get a pretty decent bounce, and that's where we're at. Today we're seeing equities having a really strong bounce. If you look at the daily chart here of the SP500, today's green bar, you can see the market gap down sharply this morning, sold all the way down, flushed out, and then it's rallied back for a very significant rally. And more or less today we're looking at some type of bounce and choppiness, and we could see the market rotate itself back up to the upper end of this range, to the 20-day moving average, somewhere into this area, and then from there we'll reanalyze and see where the market goes, if it's going to where it's going to break out of this pattern. Now keep in mind, if we look at the daily chart, we got this pattern here, we got these lows. Whichever way it breaks out of here is going to be a very powerful move. So if we break down, we're going to see some serious panic selling. We're going to see the VIX really spike up, likely into the 30s or more, and we're going to see a big move down. If the market rotates and starts to close above here, then we're going to see obviously the VIX drop dramatically. We're going to see money rotate out of the safe havens, and we're going to see money pile into the equity. So we're in this big range. Overall, we had the August 19th high right over here, and the market struggled to hold above that. It's pierced through it a few times, and last Friday we got some big selling, and we'll just got to see how things go. We're in this pattern. More or less the bias is to the downside. This is a consolidation pattern, and big waves of distribution selling keep stepping into the market. But it looks like there could be some news out there this morning with kind of the trade war with China moving the market, which is bullish, saying that China is willing to negotiate. So we're seeing a lot of this price swing take place here. Now let's go take a look. Let's take a look over at, let's pull up the gold. Metals really popped this morning. They were sharply higher, up to 1560 in pre-market trading, when the market sold off and started to go into some panic selling in pre-market. Since then, the market's recovered and gold has been falling back. It's going to end up being relatively flat on the session for the open. And this type of price action is usually a type of exhaustion move. Stocks are at long-term support, panic selling. Gold safe havens popped up to previous resistance or new highs. A very similar type of price action as these over here, where the market's trying to move higher. There's fear in the market, but it kind of reverses. We had a kind of another fear day like that. So overall, market, we could see the metals here still continue to consolidate. And a lot of it's going to come down to how the stock market breaks out of that big channel I just showed you. If it breaks to the upside, we are going to see miners, most likely in gold, sell off fairly substantially, which is not a bad thing. Gives us a new opportunity to get in at a better price and go from there. Obviously, if the stock market breaks down, we're going to see money pile into these safe havens in a very significant way and see them really take off. Looking over at energies, crude oil gapped sharply lower today as well. Everything gapped down risk on wise, and it's muscled its way all the way back. Very strong day, huge volatility. A lot of news seems to be moving the markets recently, trade wars and all kinds of different things. More or less, crude is still in a downtrend, trying to put in a bottom. You could argue this could be a double bottom formation and that we could start to see this rotate higher. We do have this falling trend line right across here where the market struggled to hold up. If it starts to break through that, it could be the start of a new uptrend. There's going to be lots of minor resistance levels near these highs, which if they start to get broken, is going to trigger a lot of short covering and buying. This could be the start of a potential bull flag and a break to the upside. But right now, the bias is still down. This is an oversold bounce. We're stuck under many resistance levels, and we just got to let it do its thing here. Looking over at natural gas, up 1.25% this morning. Again, long-term wise, we're looking for it to continue to break down and or form a bottoming formation. We're not really looking to get in early just yet. That being said, it's always interesting how natural gas moves during massive panic selling in the stock market. If the stock market breaks down, a lot of times we see natural gas be the only green thing on the chart for the day. We'll see natural gas take off. So it looks like it's trying to form a little bull flag, but in the grand scheme of things, it's still a very significant downtrend in the market. It's struggling to break the 50-day moving average, this blue line. Each time it gets close to it, it sells off. And we're still making a series of lower lows all the way through here. And we'll see if this here at a short-term basis is a little mini bear flag at this point. We could see it continue to come down, and the bias is to the downside. Let's take a quick look at the chart of bonds. We are long bonds. They move very similar to gold. Big push up this morning. It's reversing back down to be relatively flat on the session now. But overall, again, it could be in a consolidation phase. There's a lot of fear in the market. This type of reversal that is taking place right here is very similar to something like this. When the market gets a little bit overdone, you push up to new highs, and then the market consolidates for a little while. And we could be into this type of consolidation as the market takes a bit of a breather if the stock market bounces for a few days. Now, it is going to be the holiday weekend coming up, so it typically favors equities, but we'll see. If that happens, we're going to definitely see bonds continue to consolidate as money kind of moves sideways or stays into the stocks, and bonds would probably be relatively contained within more or less this kind of range here going forward. Taking a quick look at silver, here is the daily silver chart. More or less, silver is holding up much better today. Gold is kind of the more of a safe haven play, so people are following that when there's good news for the equities market. Gold sells off a little more. Silver is a little delayed. I figure it will pick up speed to the downside and wipe out most of the gains. But overall, silver is still holding up fairly well, up 1.4% this morning, and we'll see how that ends up holding up. But again, I think we're in this kind of consolidation phase for a little bit until we see where that stock market is going to break to the upside or to the downside. And then it's going to be game on for some pretty significant trends going forward. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.